restarting from zero. And I think part of the challenge is that when, uh, as women, we are, and women of color, we're magicians, right? Like we make something out of nothing all the time. So we're used to our bank accounts going to nothing. And then, hey, we just hustle up and it all happens again. Yet that is the worst feast or famine. And that really comes out of sort of a poverty behavior, right? Not just a mindset, but it's a behavior because it's been ingrained in our motivation. We just need to get everything paid. And as long as that gets done, woosah, and then we can go
Yeah.
on again, right?
Yep.
What really needs to happen with cash flow is, if I have a client that's starting today, they get an invoice today, and it may be prorated, right? For the 2 weeks, and then they'll get billed for the month, however that looks like in your business. But we need to make sure we're billing appropriately when the services are, it's being rendered or when the product is being mailed or delivered. The other piece in that billing cycle is whether or not we get deposits, right? So we need to make sure that our contract says whether or not that deposit is refundable or not.
I wanted
Because
to stop you right
yeah,
there because, excuse me, I have found with, with my coaching clients specifically, I have the trash company, so things are a little bit more solid, right? Everyone pays every month for their service. But on the coaching side, I find that a lot of my clients that are doing kind of that one-on-one consumer thing, they're too trusting, and they say, well, I usually take a deposit, but I won't take a deposit. Let's just get started, and then you could just pay me. And then they find out later, oh, I probably should have taken that deposit up front. So I don't know if you guys are listening really closely and taking notes, but what she's saying is really important, making sure that that is part of your strategy. So I'm
well,
sorry to interrupt, but go ahead.
no, that's perfect, right? And that's a great point in that it comes back to our behavior, right?
Yes.
So if your business, because one of the things I want to, and I come from professional services, right? CPAs, attorneys, engineers, we have contracts, we follow the contract. If we do some give or take on the contract, we do an amendment to the contract or the scope of work. And when I got into the coaching world, or at least I had clients that were coaches, and I'm like, where's your contract?
Right.
And they're like, what do you mean? I'm like, no, no, no. This is not a contract. It doesn't even tell you the scope of work of what they're going to get. And then to have, a chargeback, right? All of a sudden, Visa, MasterCard is telling you, yeah, your contract has no consumer protections,
Mm-hmm.
right? And it's like, what do you mean? It's like, well, your contract can't just be all about how you're going to get your money and they can't get
Right.
their money back, especially if you're not delivering and you're not clear about what you're delivering, right?
Right.
So, and then I think as women, right, we want to serve, we want to
Yep.
over deliver, and this is probably going to be challenging for a lot of people. This idea that we over deliver comes from a place of scarcity. I
Mm.
just need you to understand it comes from that poverty of like, if I can just show you how much value there is, like, why don't we practice delivering what we said we're going to deliver and do it at a standard of excellence that will blow their mind?
Yes. It's
Because
so funny.
most,
I just wrote that. I just said this under promise and over deliver is a trap. Why are you
it's a
under
total trap.
promising?
But
Why are you under
remember,
promising and why are you over delivering?
but think about where a lot of us come from. And as
Right.
women in general, right? In most cultures around the world, women have been property. So we
Yes.
are in this mode of we always have to prove our value. I have to prove, like, even in my career, when I look back, and I'm not that old, I'm like only 58, but I have been like literally the only woman in a room, the
Yes.
only woman and the only Hispanic in the room. And that's when my hair was straight, right? So
Mm-hmm.
it changes the whole. For those of you who can't see me, I have very curly hair. It is
Mm-hmm.
mostly white now, but when it's straight and brown, like I can blend in, right? Like
Yeah.
I can blend in until somebody hears me speak Spanish and like, what? So the reason why I bring all that up is because our cultures, whether it's our ethnic culture or our society for living in the US, we are already indoctrinated that we have to prove our worth in the room. And
Yes.
what's worse is we do it to each other as women. And so we're going to under promise and over deliver. And then when we're so exhausted that we can't even do like the bare minimum,
Yep.
and then people want their money back. It's like, well, but you're just a hater. It's like, no, no, no. First and foremost, what does your contract say you're going to deliver?
Mm-hmm.
Deliver that,
Yep.
right? And all of us, and I'm not saying this because it's me and Lanika, but I have witnessed this hundreds of times in my life and career, is that women, especially women of color, come to the table with a standard of excellence that they can do in their sleep. So even if we brought half of our game to the table, it would
Yep.
still be over and above what others do. So this
Yes.
idea that we're going to have this consulting call, and yeah, my business practice is that I usually take a deposit, but this time I'm not going to, because like, I'm just going to help a sister out. It's like, stop helping a sister out,
Yes.
because you're crippling her and you're making yourself more poor.
Yes.
Because the whole point of a sales process is to vet whether it's a good fit for you and a good fit for them. And if they don't have the cash at the moment, it's okay. Because I can tell you from my own experience, like, people have saved up their coin to come work with me. And even if it takes them a year, they come, and that means that they're ready.
Yes.
So for us to not take a deposit, but it's our business practice, say somebody now wants to charge back, or they're like, I want out of my contract, blah, blah, blah. In a court of law, you will lose because you are not following your own contract and your own business practices.
Mm-hmm.
So when it
Yep.
comes to cash flow and we take a deposit, then the next thing is it refundable or is it non-refundable? I'm starting to see a trend now where deposits are non-refundable. That's why the deposits are smaller. But if let's say you're in interior design, you take a deposit because those funds are going to cover materials and labor and all of those things. And so you have a longer term contract. I'm not
Yes.
talking about these coaching programs where it's like, oh, put this down. And if you're the first, right, like all the fear and scarcity, urgency things we do so that we can get money in our pocket. And then we don't manage the cash flow. And then when somebody wants their deposit back, and you're like, no, you can't get it back. It's like, what do you mean you can't get it back? Your contract doesn't say anything about it not being non-refundable or not even under
Right.
the terms of service. So one, when we're getting deposits, we need to state whether it's refundable, even partially refundable, or not refundable at all. And
Okay,
then
hold on. Let me write. Are you guys writing this down? You guys that are in the room, are you guys writing this down? I'm trying to take notes furiously, but she's just dropping bombs just left and right.
I've only been doing this for a little while, and I get excited when there are women who want to understand this.
Are in CEO school. Welcome to the room. This room normally happens on Fridays at noon. We are doing a special edition today with Audrey from the Audrey Company, and we are talking cash flow and financial reporting. And we are really deep into it now. So if I don't come back to the room to check in on you guys, just forgive me. I will be back. And Audrey, take it back away.
Okay. So when we're talking about deposits, one, if it's non-refundable, that's your money to use, right? If it is refundable, then that's not your money to use until you have earned that money, right? So, and that has an impact on cash flow, because what I see a lot of times are business owners taking deposits and then spending that money. And then when somebody says, you know what, this is not working out, I need to get my deposit back, they're scrambling to get that cash, right?
Is there like an escrow account that
I always
businesses can set
recommend
up?
clients do that. If they're
Okay.
in a business where they receive deposits and there is a possibility of it refunding, I tell them, put that money in a savings account. Put it to the side. Don't use, like, attorneys have what's called an IOLTA account. So if you're on a retainer with an attorney, that money goes straight into a whole different account. And then as they earn it, they will pull the money out once a month, right?
Okay.
And
Yeah.
escrow accounts, yeah, is perfectly fine. I mean, you can
Okay.
call it escrow. I just like I say, get a savings account, put it for client deposits, right? So it's like, that's like do not touch, sort of like taxes, right?
Okay.
If you're
I guess
collecting, go
the
ahead.
reason I'm asking is because most of us are familiar with like Upwork, right? We've
Yep.
used Upwork, and so you put your money into this escrow account, and
Mhm.
then you know that the other person doesn't get it until you sign
Right.
off on it, and the money's safe. So I was wondering if there's something that is, like that for just
Not
Entrepreneur.
necessarily. Like it's
Okay.
individual for each business. And the thing is, for attorneys, they do have to have what's called an IOLTA account. So they
Okay.
have to have an account that is for their client deposits, their retainers. And then they have to do a calculation at month end, go through all their billings and go, we have earned. So if my retainer with my attorney is $10,000 a month, and they do all the work for the month, and it's like, oh, we've earned 8,000. They can only pull $8,000 out of that
Okay.
IOLTA account for them to use for operations, right?
Okay.
But for regular businesses that are not regulated by their profession, the recommendation is get a savings account. But
Okay.
it comes back down to being disciplined,
Yeah.
right? Because the other place where we have issues outside of deposits for cash flow is sales tax. So if you're collecting sales tax, okay, by the way, that's not your money to spend. That
Right.
belongs to the government. Like you're just the fiduciary that's holding on to it, so you have to
Yes.
report it. And I know up here in Washington State, they have put people in jail for not remitting the sales tax,
Yeah.
right? Because it's like, oh, but it's money I can use and I'll catch it up. Again, that comes back to the feast or famine, that scarcity, that poverty mentality. It's like, I
Yeah.
just need to get through the month, handle myself. It's like, yeah, but when you're holding payroll taxes, right? That's why
Mm-hmm.
I always tell clients, get a third party processor for your payroll, because they're going to snatch all the cash. You
Yep.
don't have to worry about payroll taxes, nothing. With sales tax, you have to and it's tedious. That's why you get a bookkeeper. So they can
Mm-hmm.
look at what you've done for the week, put that sales tax into that sales tax savings account. And when you get to report it, that money's there, right?
Okay.
So when
You
you're
guys got
managing,
that. Make sure you have a sales tax savings account. I know a lot of you guys sell products. So make sure, and I know because I've worked with many of you there, I know that you guys don't have that. Make sure that you set aside a sales tax savings account.
yep. And then for those that are selling online, make sure that they have the shopping cart that is calculating sales tax across the states, and make sure that they have an accountant or a CPA that understands sales tax rules across, so that those reports can be filed
Okay, so
appropriately.
selling online, make sure you have a cart that calculates tax across all the states.
Yep.
Okay. I'm telling you, I'm trying to take notes too, and I'm like writing furiously. Okay.
Yeah. So when we're coming back to basic cash flow, it's like, what's mine to use, right? If it's
Mm-hmm.
a refundable deposit, it's not mine to use until I've earned that revenue, right? So I've done the work, I can now get the deposit. It could be something as simple as, this deposit is not refundable after 30 days, right?
Okay.
But that has to be in your contract, and your client has to understand that, right?
Yes.
If it's non-refundable, it's yours to use, right? As you see fit. Sales tax is not yours. That's the government's money. Give them their money.
Right.
Um, Between the IRS and state sales tax agencies, like those are the two you never want to get on the wrong side of.
Right.
Never, 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 because they could literally shut down your businesses, and not a tear in their eye. Be like, you
Right.
took my money. They could literally charge you with a crime. And I'm not trying to invoke fear. I'm just saying, for those of us who just all the money is coming in and we're not paying attention to the sales tax and separating it out, and then we're scrambling at the end of the quarter, at the end of the month when we report, that's just more anxiety that you're creating, and bad habits that you're instilling.
Yes.
You're just reinforcing that month over month, right?
I always tell people when I started Trash Logic, the first thing that I did was hire a bookkeeper because I opened up QuickBooks. Now, to give you a little history, my first business ever was a catering company years and years and years ago. I did everything wrong, everything wrong. Luckily, I had a really good CPA that kind of fixed things on the back end, but I did everything wrong. So when I started Trash Logic, I said the first thing I'm going to do is hire a bookkeeper because I opened up QuickBooks and I started, kind of doing what I thought was just kind of simple math. And I was like, I don't know what the hell I'm doing. Let me call somebody. Let me get a bookkeeper because what I don't want is to get in trouble with my taxes. That was the biggest fear that I
Yeah.
had. I was like, I don't want to misclassify something, spend money I'm not allowed to spend, things like that. So I want to encourage you guys to make sure that you have a bookkeeper. Even if you think that you got this, have a bookkeeper at least look at your books,
Right.
and make sure that you're still on track.
Yep. And and the thing that I'm going to say about bookkeepers is that you want to make sure that they have some experience, right? Like they understand the basic accounting principles. Now, some bookkeepers have learned on the job, and bookkeepers are like sort of the bottom tier, right? Like their job is just to get the data and sort it into the categories. When
Mm-hmm.
you get to an accountant, and not necessarily a CPA, because there are plenty of accounting businesses that have people that are MBAs or have accounting degrees, but they
Mm-hmm.
understand like things like, hey, so you have a contract, they got a deposit, well, that goes here, that's not revenue, and that's
Mm-hmm.
not cash flow you can spend, right? And they can sit with
Yes.
you and go through your balance sheet and P&L. Most bookkeepers will go through your P&L, your profit and loss statement, and never look at your balance sheet. Yet that's where your cash balances
Yep.
are, that's where your accounts receivable are, that's where your line of credit and accounts payable are, that's where all the things that are going to continue on in your business. Your P&L starts from zero every month, right? Revenue is not carried over from the month before, but on your balance sheet, your bank accounts, those balances carry over, right? Your accounts receivable, if they're not all collected by the end of the month, those balances carry over. So cash flow is what combines the activities from the balance sheet and the profit and loss statement.
Okay.
So
Can you say that again so Carla can type it out?
absolutely. Oh, sure. So cash flow is what marries the activity on the balance sheet and the activity on your profit and loss. And let me give you an example, right? So a cash flow statement starts with sources of cash in, right? You're going to have cash coming in from sales, right? It could be, like if you're like a boutique, somebody's coming in, they're buying straight there, that's cash, that's sale, that's cash in, right? You could be invoicing clients like for coaching or for Trash Logic, right? So then you have your cash coming in from receivables, accounts receivables being paid. You could also have cash coming in from um, the owners, right? It's like, hey, we had a shortfall, we're a startup, let me put some cash in. Well, the receivables shows up on the balance sheet. The sales shows up on the P&L. The owner's contributions show up on the balance sheet. So you see, what we're only going to see on the P&L is those sales that are coming in that are actual sales, that cash coming in. We might also have cash coming in because, oh, we got a refund on something, like we sent something to offer people. Lots of we could have interest on our bank accounts coming in. That's cash coming in. And then your cash going out would be things like payroll taxes, sales tax. Now, sales tax is never going to show up on your P&L. It's always going to be on your balance sheet. Your
Mm,
payroll taxes, what's withheld sits on your balance sheet. What the employer matches sits on your P&L, right?
got it.
So managing cash flow, looking at cash flow is really important. Oh, let's talk about equipment, right? So that new phone, that new computer, all that you're, that's going on the cash out, that shows up on your balance sheet as a fixed asset if it's $2,500 or more. Because if it's
Wow.
not, then it's an expense on your P&L, right? And that's why it's important to look at cash flow, because one, you have to understand where your cash is going and then be intentional that that's where you want it to keep going. Because here's what I know, especially around, we're in the age of apps and subscriptions, right? Software as a
Yes.
service. The one category I look at all the time is dues and subscriptions. And then it's like, so what's this for? What's this for? And you'd be surprised how many, especially for those that are doing marketing, all of a sudden, I'm going to try this, but they never turn the subscription off,
They never
realizing
cancel it.
that we're not using that anymore. I've literally had like clients say, finally say
Hmm.
like thousands of dollars because they're
Yeah.
like, oh, why do we still have a subscription to this? We canceled that a year ago. No, you didn't, because you're still paying for it.
So one of the things that I recently started doing, because I was guilty of that. Now, you guys, my first degree is in marketing. So I love marketing. I try every single marketing app that comes out because I want to see how it works. And they all have free trials and all that. My phone has about, I don't know, 200 apps on it. I am just app crazy. So what I started to do, because I did go through when I was going through my P&L and I was kind of trying to see where I could cut back, I saw that I had so many subscriptions. So I had signed up for Truebill on my business side so I could kind of see, get alerts, but then that was getting annoying. So what I did was I turned off my business debit card, and I just turned the card off so nothing could come through. And I did that for a month, and I would only turn it on if I needed to use it. And so then I started getting emails like, your payment didn't go through, your payment didn't go through. So then now I can cancel all those things I'm not using anymore. Oh my God. I'm embarrassed to tell you how much money I
Don't
saved.
be embarrassed. I literally saved a client $5,000 a month.
Yeah. Yeah.
Right. And part of it, so, and here's the thing, like what Lanika did, like that's kind of extreme. I'm gonna just turn this off because one, you have to know who you are, right?
Yeah.
Like you gotta know how you work or whatever. The other thing that I would recommend is that you should be looking at your financials every month.
Yes.
Right? It's like look at your dues and subscriptions and then go, oh, why did we do that? Right? Because here's the thing that I tell clients all the time is if we're going to do a subscription for HubSpot, right?
Mm-hmm.
Okay, so what are we doing now? What's going to be incorporated into HubSpot? And then as soon as we know HubSpot is up and going, we should cancel all these things, right? So it's on the marketing team to cancel all these subscriptions that we agreed on, right? But I think a lot of time what happens, especially with smaller companies, is we're always following trends as opposed to what do I want to do with my company? What is the marketing strategy that we are employing this 90 days? And do we need any more tools? Because if we don't need anything else, it doesn't matter what everybody else is doing. Because unless our software just completely blew up or the app is just failed, there should be no reason we're adding more things to the mix if we're trying to figure out what's working in our marketing.
Mm-hmm.
Right?
Not canceling, that's the issue, is not canceling the things you're no longer using that you
Exactly.
migrated away from.
But you realize what it is, right? Because how many people have things in their garage or in attics or in storage? Because it's like, I might use that sometime.
Right.
It's true, right? Like if you think about how many billions of dollars the storage industry is making, because people are just keeping stuff on the off chance that they might use it or come back.
Yes.
I'm like, outside of my kids' baby pictures and maybe wedding pictures, like, I don't need none of that stuff.
Yep.
And so many people have like I can go to an estate sale and buy something else, right? If I need it now. It's the same way in our financials, right? So when we're managing cash flow, if I'm going to look to cut costs, I make sure that I'm not cutting costs that's going to affect my revenue.
Yeah.
So if I have in place a lead generation strategy and I have a sales system in place, then those tools that are helping with those aspects, I'm not going to cut. But what I'm going to do is evaluate whether or not my lead gen system is working, whether my sales system is working. And if it's not, like get that information, tweak it, and then track it and then test it again, right? As opposed to, well, that's not working. Okay, but you only let it go for 30 days. You're not going to figure anything out in 30 days.
Right.
Despite what everybody online is like talking about, right? 90 days, 6 months is a good trial run, but it's not the set it and forget it. It's, okay, we did this. These are the metrics we're supposed to be looking at. So if we're trying to do lead gen and we're using, I don't know, Active Campaign or whatever whatever we're using to create our landing pages, then we should be having metrics that say, hey, so we're expecting that we should be getting this much more traffic. So we'll say that, hey, we're expecting to have 100 more visitors to the landing page, and maybe 50 of them will give us their email so they can download whatever. And then from that 50, how many are buying our product long term, right? Those are the metrics in place. So then oh, this subscription to Active Campaign or lead pages or whatever, oh, it's working. But if it's not, you can tweak it and then watch it again and see what's happening. What ends up happening is like people go from one to the other, and it's like, okay, but you don't have anything being able to measure what you're trying to accomplish. And then if we look at your cash flow, you just spent, $1,000 on 4 or 5 different subscriptions to things that you thought were going to fix the problem, but you haven't identified the issue. Right.
Sounds like there's a lot of psychology involved in this.
Everything around money. So everything around money deals with the psychology of money, but our own mindsets, our own motivations and beliefs, right? Because who we become is based on what we believe.
Yeah.
Right. And so if our mindset, like we talk all the time about, well, we just need to get a mindset coach. Yep, that's great. But when you start changing your thoughts, but if it never drops into your heart, then it doesn't change your motivation. Right. Like,
Mm.
so I'll give you a great example, even in my own life. So when I still had my CPA firm, I enrolled in a $50,000 coaching program
Wow.
for a company that in 4 years I was like, I was done. And in 2012, I was at the beginning stages of a very traumatic cycle in my life that ended in with my 25-year marriage ending, right?
Okay.
But so when I look back and go like, why did I do that? Because I knew I didn't want to do the CPA thing anymore. But why
Mm-hmm.
would I do that? Oh, because right here, what I believe is like, I just want to feel like I belong somewhere. And I love these
Mm-hmm.
people. Let's not talk about, oh, because I had the mindsets down. Here's the affirmation. Here's what
Yeah.
I'm at my mirror. And like, because it becomes rote here, but if it never goes from here to here, it's not going to change this. And then the behavior doesn't change. And then it's like $50,000 later, it's like, well, that was nice, but that, but a lot of us get caught into the emotion, right? Because the marketing is created to tap our emotions,
Yes.
to tap our heart. Well, don't you
Yes.
want to belong? Don't want to miss out? And if we haven't done the healing in our soul, our money, our cash flow, our financials are always going to follow where our heart is going, not where our mind is telling us to go. Because what ends
Mm.
up happening is I justified why I was still paying that coach for that coaching program. Oh, but it's a contract. Granted, I would never back out of a contract unless it was like I'm not getting any service delivered, right?
Mm-hmm.
But I rationalize it. I need this for my business because I can increase this, that, and the other. And it's like, yet every day I'm like, I hate doing tax returns. What I love is the strategy and but I'm doing work that literally is like 1,000 cuts, razor blade cuts to my soul because, well, I pay this because when I really got honest with myself, it's like, I just wanted to belong in a community. It's like, girl, get some friends. That'll be cheaper.
Right.
Get some friends.
Yeah,
Right.
get some friends. That's what I said about my therapist. I was like, okay, she's real familiar. I could do this with my girlfriends.
Yeah, unless we're going back to default behaviors, right? Because that's the
Right.
other piece, right? Is we're always being and becoming. And so when it
Mm-hmm.
comes to money and finance, if we're not going to look at, where we're earning our money, how our money is coming, how cash is coming into our business, and that's crypto as well. So if we want to talk Web3,
Yeah.
where it's coming from matters. How you earn your money matters as much as, how much you're earning. Because I know people that may have businesses that are grossing $500,000 and yet are profitable to the tune of 50%, like all the way bottom line, because they are very clear about what they're investing money on. And when they want to make a move to, I think we want to expand this area, they have reserves of cash flow. So they're not cutting these out of current operations to make that expansion. If the CEO is like, I need to put a team in place so that I can have a sabbatical and I can have smarter people in the room about certain things,
Mm-hmm.
we can now make these decisions for payroll and not be trying to hustle to figure out how they're going to make payroll, right?
Right.
So cash flow is royalty, right? Because the saying
Yes.
is cash is king, but cash is
Yes.
queen. So we're just going to say cash is royalty. It is sovereign because once you run out of cash, you are done,
Yes.
right? And as women, we want to barter all the time, but then that's great starting out, but we never put in our cash flow budget what it's going to cost to get that graphic designer on, that social media manager. Because we're
Mm-hmm.
partnering with our girlfriend who's starting a business. It's like, yeah, but what does this really cost? Because at some point,
Right.
cash needs to be exchanged for these services.
Yes.
And then we're intentional because it's like, oh, you need a marketing strategist and you need a social media management team because they're not the same. Your
No.
social media team is going to do the tactics. Your
Mm-hmm.
strategy, like how are we going to grow this company? How are we going to deepen our revenue? And then we're going to do it in these channels, right? Then all of a sudden you're like, oh, and what is that going to cost?
Right.
And do I have it in reserves or am I going to have to increase my revenue to cover what's coming?
How do you have the conversation with your team around money without, um, without being 100%, um, you want to be somewhat transparent, but right, your employees don't need to know what your cash flow is. But how do you have that conversation when you have people in key positions that are making decisions that affect your cash flow?
Yeah. So usually with the leadership team, we are a little bit more transparent, right? It's like, hey,
Hmm.
so let's say we're a consulting firm. We need to, our projects, our contracts need to be 45 to 50% profitable. Because
Hmm.
once that happens, we can cover marketing, sales, and all of our general administrative expenses. They need to be aware of that. They need to
Hmm.
understand, like the CMO, your chief marketing officer needs to understand that we need to have certain metrics in place, because in order for me to invest more, you got to show me that what we've done already is not working, or that
Hmm.
it's working to the tune we need to invest more in it, right?
Right.
So I think part of that is culture. And
Hmm.
second of all, it's, well, everything, money touches everything in a business.
Hmm.
So, we need to talk about profitability.
Hmm.
What does it cost us to deliver those candles, right? To make them and deliver them. And once we know that, we set our price, but then it's like, how many of those do we need to sell? And then for the people who need to understand that, and I'm using product uh,
Hmm.
because it's the same for consulting, or if you have
Right.
a people intensive business, the people that are delivering the services, delivering the products, that's a cost that, we have pay bands to help with transparency there. So if you're filling in this role, this is the pay band for the role. So that's a level of transparency there. But for
Hmm.
your leadership team, you got to be willing to have your accountant or your CFO do a financial presentation. Hey, so
Hmm.
this is where we're at. Here's where cash is. Our runway. Most people, unless they're outside of VC or angel investment startups, don't know
Hmm.
what your runway is. So your runway is the amount of cash you have. Um, how long is your cash going to last you before you fall off the cliff, so to speak, right? And so let's say that that your cash outflow every month like your monthly costs is $15,000, and you have cash in the bank of $150,000. Your runway is 15 months,
Hmm.
right? But most people don't know that, because we're used to, like, oh, I got $30,000 in the bank. Okay, that'll get me through two payroll cycles, and right. Once we know that, and we need to get in the habit of looking at our financials, and then those are the things we share with the leadership team. Hey, we have a runway of 6 months. We want to make sure at the minimum we're always at 6 months, and when it gets lower than that, we have to know why that is, right? Hey, we
Hmm.
hired two more people, we invested here, it's lower, but now we need to make sure we're tightening up. And then being able to give people budgets. What are you going to give them responsibility and authority for? Right?
Hmm.
Because we like to delegate the task, but then we want to hold control over them making a decision about it.
Right.
So it's like, hey, so for marketing, you say that this is what you need, this is what our budget is. You can't go past these numbers. That
Hmm.
gives them a level of responsibility and authority to make decisions in their realm that will help with the overall cash flow and financial of the company.
Yeah. Okay. That's some really good advice. So know what your runway is, know how long you have before you're going to fall off the cliff.
Yeah.
So
Mm-hmm.
that's really important. And I always tell like my sales team, we're always working 3 months out. If you're working on deals for this month, then you are so behind.
Right.
We should be
Right.
always working for deals that are 90 days away.
And that's so important. So for those, companies that have contracts, like, you have to know how long it takes you to close that deal, right?
Yes.
If you're a smaller business and you're to consumers, or you're marketing to smaller businesses, you still need to know how many times do you have to talk to them before they say yes and swipe.
Hmm.
Because if you don't know that metric, you're
Yeah.
always chasing,
And
right?
we talked about that, right, you guys? We talked about your sales cycle and knowing what your numbers are and knowing what your closing ratio is, because your closing ratio is going to be different than my closing ratio. And how long does it take you
Absolutely.
to close that? And then how many people do you need to talk to before you can close a deal?
Yep.
So, just tying that back in.
Yeah, and with smaller businesses, they always want to, like, I want to work with Google or Microsoft or Facebook. It's like, yeah, but you're going to be financing in the first 30, 60, 90. 120 days of
Yep.
that contract. So you need to have enough cash flow, right, to deliver what you need to deliver before you get the first payment. Now, with
Mm-hmm.
some of them, it's like once you get to a certain place, like Microsoft, they'll pay you in 10 days. They're gonna take
Mm-hmm.
2%. Great, take the 2%, but I got my money in 10 days after
Mm-hmm.
the invoice, right? That again is a cash flow decision, right? Because I could be like, no, just pay me in 45 and I get 100% of my cash. It's like, nope, you just close my collection cycle because it's normally, hey, net 30, right? And then what do the big guys do? They all stretch you out 30, 45, 60 days, and they go, oh, this is normal policy. But if you're in this accelerated vendor payment program, you can get paid in 10 to 15 days, but we're going to take 2%. Great. And that's a cash flow decision, right? Do I want 100% in 60 days and me being stressed and trying to hustle how to figure out how to close the cash gap in that time? Or do I just let them take their cut and get, 98% of my invoice and then know that I'm solid for payroll and marketing and sales?
And that's a strategy that I've seen other companies employ as well on their own side is if you pay early, we'll give you a discount. So that's something to think about as well.
Yeah, exactly. The other thing when it comes to cash flow is looking at, credit. Why are we extending our clients credit? Now, if you're dealing with enterprise Fortune 1000 companies, you're not going to get around it. They're going to pay you when you pay you. Just get on their accelerated payment program,
Mm-hmm.
right? But you don't have to extend credit. You can tell a client, hey, I love that we're working together, but we're going to have a deposit, and this is how this needs to get done. Like you will need to submit payment before each part of the progress, and then at some point in time you may decide to extend them credit, but you're not required to extend someone credit, right? That's on you. And even if you have pressure from your industry, it's like, but this is industry standards. Like, yep, and I'm a brand new company, and I don't know you from Adam. I don't know
Right.
you from the paint on the wall. So in order for us to establish a relationship, we're going to require a deposit down. And then we're going to, go through and make sure that, you pay us in advance before we start the work for the next phase of the project. However that looks like. It protects both of you, right? Because then it's, are they a client that you need to say goodbye to, right? Finish up what you need to, be like, no, we're good. The client can do the same and you don't owe them any money.
Right.
Because that's the other thing is like, no, I just need to get all my cash, because we're always looking from what we need as opposed to, if you set it up that it's a mutual win-win and you communicate, right? Like, don't be shady about it, be open. Hey, you're a new client to us. And our business practices for new clients mean that we need to take 50% upfront. And
Mm-hmm.
this, and then, at the end of this phase, we'll reconcile and see where we're at. And then anything over that 50%, you'll have to pay. And then before we move to the next phase, we'll require, an upfront payment again, right? It establishes healthy boundaries and communication. And I think that, healthy, open communication really opens up your cash flow because people trust you more. It's like,
Yes.
oh, okay, that makes sense, right? As
Mm-hmm.
opposed to, no, this is just how we do it. No, no, we do it this way because you're a new client. And at some point in time in the future, same thing with those of you that might be on COD with vendors. They're doing it because you're a new business. You're new
Mm-hmm.
to them. Give them 6 months and then come back like, hey, it'd be great if you could give me some terms, like even 15 days, because that'll help with cash flow. They'll understand, they'll be okay because you now have a track record with them to be able to say, no, they're solid. They've been consistent
Mm-hmm.
in their payments and in their ordering, so it'll be cool. But you have to manage that, right? If your clients are paying you in 30 days, but you got to pay your vendors in 15, you got to bridge that gap.
Yeah.
Which is why managing your cash flow and having cash reserves is what that's all about.
But also going back to what you said about cash being royalty, I recently had an experience with a vendor that I've been working with for 3 years, and they still have us on COD. And so I requested that they take us off COD and give us terms, and they refused to do that. Um, who's that? Can you mute your mic? Thank you. Um, so they refused to do that. And so I just said, okay, well, then I guess we will take our business elsewhere.
Mhm.
And even though the branch manager that had been working with us, really didn't want us to go and tried to negotiate, with her back office, they wouldn't do it. And I said, you know what? I've given you guys lots of money.
Right. Right.
So, I'm not going to do this. I feel disrespected. So I think on the other end, you have
Hmm.
to also know your worth and,
Yep.
let these vendors know that if they want to keep your business, then
Absolutely.
they need
Absolutely.
to also work with you and offer you something that works for you and your cash flow too, you know?
It should always be a win-win, right? And I think 3 years is a long time to finally ask for CO2. Because if
Mm-hmm.
I'd have been like part of your leadership team, like, okay, so we need to approach, because that'd have been a year. A
Yep.
year in, I'd have been like, why are we still on COD with them?
Mm-hmm.
Right. And part of that is relationship, right?
Right.
Depending on the size of the company you're dealing with, you might have a great relationship with your point of contact, but they're not the final decision maker. And
Mm-hmm.
so what you need to make sure is that you're having that relationship with that decision maker as well, so that they understand. Now, if they're a large enough company, they'd be like, yeah, go somewhere else. Like, oh, okay.
Mm-hmm. Yeah.
And that's why, for me personally, in work, I try to seek out companies that are led by women of color first, but people of color,
Mm-hmm.
because I want to give them, my business, but I
Mm-hmm.
also expect them to be professional in their delivery,
Yes.
right? And I'm quick to be like, oh, so may I offer something because this is not working? Because like this is going to impact your cash flow. I don't want to negatively impact your cash flow, but there are standards. You need to become professional. This is what our agreement was. And then,
Mm-hmm.
I've had more women than men, come at me like, well, your contract says this. You
Mm-hmm.
said you were going to like, hey, if we have to push a deadline back, let's do that, right? Let's
Mm-hmm.
communicate that. Okay, we pushed the deadline back. I still don't hear from you. I'm reaching out, right? And then it's like, oh, but I have all the, like, you know what? The year
Mm-hmm.
that my son attempted suicide, I was still
Mm.
working, right?
Wow.
But I talked to clients and I went, look, here's where I'm at. Like, we've had a family emergency. And, for certain clients, they were actually friends. So I'm like, look, you know what's
Mm-hmm.
going on. I need a little, they're like, great. For a couple, they were like, great, because I want to put it off anyway, right?
Mm-hmm. Right.
So can I deal with money? So they're like, oh, you're gonna let me slide for 30 days?
Mm.
Sweet, right? And you're like, yeah,
Communication,
but
right?
you realize it's me and we're gonna come back with a vengeance, right?
Mm-hmm.
And we
Right.
just kind of laugh. But it's this communication.
Communication.
Hey, supply chain is killing us right now. So, the fact that I mean, and I have vendors or, companies I bought from that I haven't bought in like a couple of months, right? Because I kind of buy in bulk. They're still sending out email. Hey, so for those of you who've ordered, like our supplier, like they're still 3 months out. We really don't know. And if you want your money back, let us know and we'll give you the refund, right? That goodwill.
Yeah.
I know we've been talking about a lot of things that are not directly tied to cash flow, but your reputation translates to healthy cash flow. If you
Absolutely.
say what you're gonna do and you do it, if there's a glitch or a speed bump, you communicate and then you still deliver on the updated communication, right?
Yes.
That you have contracts in place, that you honor your own business practices and don't come across as shady or like someone else is out to get you. It's like, no, everybody, like we're in a new
Right.
environment, right?
Right.
So when you like, and don't use supply chain as your issue if you don't actually have supply chain issues,
Right.
right? Because I
Right.
see that a lot. Hey, the global world, like, okay, but this little corner of the world ain't having those problems. So
Right.
what's really happening?
It's not an issue. Yeah. So people aren't stupid, right? We're savvy. So,
Right.
your people will call you out. And then some people just will just stop working with you and not tell you why.
Yeah.
So you
Yeah.
need to be honest. Yeah.
Now, I don't know how much more time we have, but I wanted to get one more point in about debt.
Yes, I want to talk about that. And then if we have about ten minutes.
Okay.
So if we can kind of talk about also financial reports that we need to be pulling every month too.
Absolutely, absolutely. So, when the one thing that I tell clients all the time is before you get into debt, have a strategy to get out of debt, right?
Yes.
Um, because what ends up happening is your future cash flow is now tied to debt. It's not providing a service for you. It's not. So when you decide that you want to go into debt, let's make sure that, let's say it's equipment that you need, right? Let's make sure we have a strategy on what it's going to look like, that you're buying the equipment that's going to either help you generate new revenue or help you maintain what you already have so that you can increase that level, that particular revenue stream in your business. If you're going to get a line of credit, please don't treat it like an installment loan, because I literally had clients that were just making the minimum interest payments on a line of credit, and that line of credit got turned into um, an installment loan, and they were never able to get another line of credit. A line of credit is sort of like a credit card. It needs to be revolving. Now, I realize a lot of people use their credit cards to, pay for something, and then they pay it over time and they make the minimum payments. What I'm telling you is with a line of credit is you want to make sure that if you, let's say you're using it to close the gap for payroll, the minute you get a deposit in from cash flow, you put it against that line of credit because you want that principal to go down. So it's sort of this, I get cash in, I pay it against the line of credit. If I need it again, I draw against the line of credit. Because what that does is it minimizes your interest payments on the line of credit, and it shows the bank that you know how to manage revolving credit. So then as your business grows and you need a larger line of credit, they're going to look at how you're managing your receivables and how you're managing debt, and look at your profitability to be able to determine whether or not you're a safe risk for you to have a larger line of credit. Line of credit is not an installment loan. Please don't have it turned into a loan, because then what ends up happening is if that line of credit gets turned into an installment loan, you won't be able to get a line of credit with that bank again. You just won't.
Right.
And then you'd have to go to another bank, which is in and of itself it's too much drama to move to another bank, especially in this day and age. So I did want to bring up, a line of credit, or if you're going to do equipment financing, making sure. So I'll give you an example. So I had a banker years ago refer their client to me because they were now wanting to purchase some equipment because they had been, like chasing this one potential client for like 2 years. And they finally got the contract signed, but they didn't have equipment to deliver on that contract. So they're going to the bank saying, hey, we want to get financed. And they're like, well, we just financed you last year on this other piece of equipment.
Right.
That they bought that with no plan in mind for the equipment. Right. So the bank's like, well, we can't finance you anymore. And I looked at him and I went, well, here's what's going to happen is you now have to subcontract that contract out. And so now your profit just literally cut in half because now you're subcontracting out, because now you have the contract that you wanted. And so
Right.
the reason I bring this up is because he bought equipment that he thought, like, in the midst of I'm chasing this big contract and running operations, he saw sales were dropping, and instead of trying to get more of the same kind of sales to replace what was leaving, it's like, oh, I'll do something different, buy this other equipment and offer this new service that wasn't generating more cash flow, but it
Right.
was, not cash inflow, was more cash outflow because he was now financing this equipment. And yet the ideal client that he's been chasing for 2 years signs on the line, bank can't give him the equipment he needs to deliver, and now he has to outsource it.
Wow.
So that's why I say when you want to go into debt, let's have a strategy. What equipment are you buying? Is this solely for this contract that you're signing or for this client? Same thing with, doing things like Entreport or Infusionsoft. It's like, it's a big investment. And yeah, it might be an annual payment of $20,000 or $1,000 a month, whatever that looks like. But again, it's like, what's the strategy? Are you going to use it to the full? Is it really about maintaining your revenue? Is it about growing your revenue? Is it about being efficiency, right? The reason why people have software for accounting, for bookkeeping is because back in the day, and I'm old enough to have done things by hand on pen and paper. Talk about efficiency. Oh, I can connect it to my bank account. It all comes in and somebody else can categorize it. And then I can look at the financial statement, which is our segue into what financial statements should your bookkeeper be sending you every month.
Yes.
So if all you have is a bookkeeper or an accountant that's doing your bookkeeping, you should be looking at a balance sheet as of the end of the month, right? So for clients that I am on their leadership team, we are looking at the financials for the balance sheet ended March 31st, 2022.
Okay.
So that we can look at, and the balance sheet is called a statement of position, because that balance sheet, like, I can pull it now at 10:06, and then the bookkeeper can apply a payment to accounts receivable at 10:15, and that balance sheet's going to change,
Yeah.
right? but it's a statement, it's like a snapshot of where you are. Are your assets more than your liabilities? How much equity, book equity do you have in your company? What's the net worth of the company, right? So balance sheet is the first one. Most bookkeepers don't look at it. And so when I look at it, I'll see all kinds of weird, funky things. I'm like, clearly we're not paying attention to the balance sheet. You must look at the balance sheet.
Okay.
Second is a P&L, your profit and loss statement.
Yeah.
Look at it for the month and look at it year to date. What I tend to do, and if you have a budget, then it's budget versus actual on a monthly and an annual basis. Because what you want to be able to know is that you were, especially if you created a budget, you were intentional about, hey, in order for our business to maintain or grow this year, these are the activities we have to participate in, and this is the cost of those activities, which means that you have a talent strategy in place. If you're going to get different products, like expand your product line, you know that it's going to cost you this much to acquire those products and then to deliver those products. So you have a budget in place, and then what it allows you to see is every month you compare your actually what you did in your P&L with what you thought you were going to do in your budget, and see if you overspent, right, on cost or underspent, right? And then for revenue, it's, did we meet? Like, are we under what we thought we were going to do, or we over, or did we meet it, right? And the reason you want to go through those evaluations is, let's talk revenue. If it was more than you expected, why, right? Was it the economy? Was it legislation? Because legislation has an impact on our businesses, right? Was it that we got this new sales rep on, and oh my gosh, they are just tearing it up? You have to know why you were more than what you budgeted, right? Because if it's something you can duplicate, you want to immediately figure out what that is and then be able to systematize it. If it's the same, that's great because that's what you expected. But if it's lower, then it's like, why is it lower? Right?
What
Is it
happened?
that a project got pushed off and so we couldn't recognize revenue, or whatever the case may be? Usually people will, when it comes to revenue, they'll look at, oh, it was lower, but they never look at why it's higher. Right.
Yeah.
So there's a good analysis there. And it doesn't have to be deep. It's like,
Right.
what's going on with my company? Who's doing what? Right. Like, what's happening? And then when we look at cost, same thing. Is it what we expected? Right. Payroll for the most part should be in the range of what we expect. Unless we hire new people, it might be a little bit over. Right. But if we're budgeting that, hey, we expected to have new people in this month, then we'll see in that range. But if we spend over, then we're like, oh, why are we spending more? It could be that, oh, we decided that we were going to make a change in our marketing strategy, so we spent more money on marketing this month. And then when we look at,
I'm sorry, is there a scenario where setting your financial documents or statements up, accrual versus cash makes a difference? And like, in what scenarios? Because I've had these, I've had 3 different accounting firms I've worked with, and they all have a different take on what we should be doing in that.
Yeah. So most bookkeepers, most accountants will just do cash basis, right?
Yeah.
Well, that's great if you don't have any receivables and you don't have any payables, right? So then if you're like a store, right, like a grocery store, it's cash in, cash out, right? So that makes it easy. You can see the trends. The challenge is with most of us, we have receivables and we have payables. We might even have some debt. And so the reason why you do accrual is because on your profit and loss, it's not the cash you got in, it's the revenue you earned, which is different, right? It could be different, right? It may not be, right? You may be on a contract where they pay you $10,000 a month because you're giving them $10,000 worth of service or product, right? So that might line up. But accrual basis accounting is really that the revenue that you see is what you have earned and the cost of what you have incurred, even if you haven't paid it, right? So payroll clearly is always cash, right? For the most part, for smaller businesses. But you might have, your dues and subscriptions are cash basis, even if you're putting it on a credit card, right? But it could be that, your delivery, like you have a product-based business, and let's say that it's glassware you need for your candles. They may, like you pay them in 30 days. Well, you want that to either show up in inventory or cost of goods sold in the month that it's relevant, not just when you pay the invoice 30 or 45 days later. right?
Right.
And the reason why you do accrual, it's a more true telling of what's actually happening in your business.
Okay.
Because cash in, cash out, that's why we have the cash. That's why we should be doing a cash flow, and we should be doing a rolling 12-month cash flow, right? So it's not just, hey, let's look at it this month. It's like, I want to look out, because if I have a seasonal business, I want to know where I'm going to need to dip into my line of credit, or maybe I don't have a line of credit and I know that, oh gosh, come September, things are going to be a little lean. I should be talking to my banker now about securing a line of credit before I need it in September.
Right.
Like
Right.
that's what a cash flow forecast does for you. So you look at what happened actually, so you can run your QuickBooks reports on a cash basis to see what happened with your cash flow. But then you have a forecast that's like, here's what it looks like every month. And it could be it's the same every month, but it's like, oh, we're gonna do this marketing thing here. Here's the cash that's gonna need for that. Oh, I'm gonna hire a new employee in May. Let's plug in what the cash needs are going to be for that new employee so that I can see further out what my cash needs are going to be and how am I going to fill the gap. Is it going to be more sales, or is it going to be the owner putting money in, or is it me, getting a line of credit?
Fantastic. Thank you so much, Audrey. This was so incredible. My goodness. I normally have 2 pages of notes. I literally have 4 pages of notes today.
Wow.
And this was actually a shorter class than I normally do. So thank you so much. You were fantastic. I am going to be reaching out to you personally, but I wanted to give you the opportunity to tell everybody how to reach you and how to find you all over the interwebs.
Yep. So all over the interwebs, I am Audrey L. Godwin. And you can DM me, like, if you have any questions on what you heard today, or as you're thinking about it, right? Because this is a lot. Like, reach out, just DM me, Facebook, Instagram, Twitter, any of it. And then, if you want to email me, it's hello@theaudreycompany.com.
Have a great day, everybody. Mwah.
Have a great day. Thank you.
You're welcome. Bye-bye. Thank you, Audrey. We're all done. We're clear.
Bye.